Hey guys, what's going on? October 2nd, 2019. It's a Wednesday. I apologize for any background noise. I'm trying to post this videos earlier for you guys, and I found a coffee shop with a faster internet connection. So hopefully this video is going to get uploaded much faster today than in the last couple of weeks. So with that said, without any further ado, we've got some exciting stuff going on this morning. The number of the day is 2922. 2922 is the number to look for as far as the market's breaking that number lower to actually add to the put positions. We are expecting a bounce once the market is going to open. We are looking to gap down. So far, the futures.
Cytosorbents announcing positive surgical outcomes from cytosorb removal of antithrombotics and emergency cardiac.
So far, the futures pre-market about down 13, 14 points. They're breaking low at one point. We're down about 20 points. So the ADP report reaction, it's about 820 right now. Is kind of don't have a reaction. The market is not responding negatively or positively, which typically resolve into a positive move higher. Therefore, we think that the market will actually move up once we get opened up at about 9:30. Expect a pop, a bounce, and we definitely want to come in and short that bounce in the expectation of the reversal by about 2 p.m. So with that said, we should not clear the level of 29.35 or 29.38. We should stall out there and then reverse the move lower. Watch out for the multiple moves 3 in a row, meaning we are gapping down lower. They're going to close some of that gap, but we're going to fail to close the entire gap, and we will reverse. That could result in 3 consecutive moves, 3s in a row, which is quite rare, but the setup is here for that. In order for that to happen, we definitely need to get close to the 29.05. In other words, this level that we're looking for today at 29.22, that level needs to be broken. Still waiting for this big catalyst on Friday, the job number that could send the markets spiraling lower. The overall strategy still remains the same. We're short in intraday bounces. Some of the top trades we'd like to highlight for the day is AYI. We're waiting for a report. Everything looks bearish. Typically, the stock has a high probability of gapping down after the report. BOK is our top play in the financials area, and XLNX catches another downgrade. Guys, this is like a daily thing. XLNX, that's a cloud thing, so the cloud sector is continuously moving lower. Now, if you actually take a closer look at CRM actually had some positive forward-looking statements today. At 13% growth and all kinds of positive news, and it actually failed to move higher. So cloud sector is definitely suffering here, and it's likely to continue the downward spiral. Some trade that we're monitoring is EDU. We think this one's got potential for a big drop. Facebook, of course, AVGO looks primed for a final drop here. We've placed a separate video about CMG / McDonald's correlation type trades, so please review that if you haven't already. We're not going to spend a ton of time talking about this, but this remains to be one of the top trades in the restaurant sector. So heading lower in the trading tunnel, guys. So yesterday we finally cleared that 29.46 level. Today we are playing with this 29.22 level. All eyes on this situation. Basically, run a chart of S&P 500 futures and run the VIX chart and pay attention to see if the VIX actually will break above 19. If it will break above 19.5, sorry, when we're getting close to this 29.22 area. If that does take place, it gives you a high probability that we will visit the next stop at 29.05. Now, clearly, here's to zoom in. This is the situation pre-market. We're playing with this 29.22 level, and so clearly, if that does break lower by 2 p.m. today, the next stop is 29.05 to help you visualize this a little bit better. As far as AYI trade, guys, this particular stock is closely related to the building sector, construction sector. We've got Lennar Homes that actually reported a stellar quarter, but the stock is only up just a little bit, like $1 or $2 in smaller volume. That is not a good reaction considering the report in Lennar. With that said, we are expecting the shares of AYI to actually gap down after the report, and we're targeting this level of 113. Historically, this has been the number on the stock every time it gets to this level, about 133, 129. The next level in this stock has been about 113. So if it does get close to 113, it's reasonable and I'll encourage you to actually take some gains. Now, with that said, let's say it drops down to 125 after the report, bounces back to 129, 128 area. That would be a good time to actually get into your put positions. I would suggest buying 130, 125 strike puts, and that's what we're looking at doing. The chart is extremely bearish. You got a death cross persistent. This continuous downward spiral, basically a series of lower highs being created now for about 2 years in the stock. And even though it has not broken that level of 100, this could actually materialize over the course of the next couple of months here. So we're not expecting a break below 100 today, but we're definitely expecting it to break a level of 120 and trade in the 110s, 113s, 115s area at some point today. Here's a longer time, actually shorter time frame on the chart. Everything is confirmed here. We are about to cross over, create this bearish cross right here, which could propel the stock substantially lower from here. Also, this cross right here is preceded by this bearish MACD cross, which is highly bearish for the sin as well. Looks like in preparation as this drop, institutions have been pulling out the money already, so they are in the mode to be selling the same. Semi stocks are finally breaking down pre-market. We got not a huge volume, but we do have finally some momentum in these semiconductor stocks to where they've been holding up despite of these bearish charts. They've been holding up incredibly well over the course of the last week, but looks like they're finally exhausted. So expect a big break in the semiconductor stocks. Probably going to hit all over the news in the next 72 hours. Oh, why is semiconductor stocks selling off? And they certainly will. So ASML, AVGO, LRCX. AVGO remains our top heavy favorite for a drop in the semiconductor sector. I know it's been a tough trade over the course of the last week. We've managed to lock in some gains on this one, but not as substantial as we would like. But the opportunity is definitely here. Just because the trade has not worked out with these 500,000% returns, it does not mean it's not going to materialize over the next 72 hours. So we still consistently and persistently buying 275, 270, 265 puts in AVGO. Basically, guys, hey, I'm saying this is the last call for alcohol right here on AVGO. Bigger drop is in the making. Targeting $10, $20 drop by Friday. A very precise triple top formation, heading for a death cross right here. This death hook. I mean, it's hard not to see it right here, guys. I like the setup very much because this death hook is in a condition where we just had this gap down. The stock is stalling. It's creating some bearish candles right here. All the drops are confirmed by this huge distribution, huge sell side. You got a death cross preceding this cross right here. So, guys, everything looks set up for a big drop. And potentially we could see AVGO at $200 like in the next 60 days. But for the purpose of this week, we're targeting a level about 260, 256 is where we think the stock could actually drop to. Weekly chart also confirms this consistent series of lower highs on this thing. Reversal candles continue to materialize. So this 212 area will not be far out of reach in the next 60 days. We got a head and shoulder reversal right here. We got definite crosses right here on the MACD. One here and another one right here, guys. This is phenomenal. So as far as financial sector, let's talk about that real quick. Based on Charles Schwab, TD Ameritrade, all these stocks tanking on heavy volume yesterday. Basically, we're in a world where there is a trend where companies are charging less and less fees, and they're making money on some other products, like selling your data to other companies. Seems to be the trend. So maybe they're slashing these commission costs. They're not entirely eliminating them, but they're slashing them, and that's the trend. Now, one company that has actually underwent through a bearish formation right about last year is BLK, and we like this because this story that developed yesterday should definitely impact this BLK or BlackRock Financial more than any other financial stock out there, considering that most of the financial stocks, they're not, like Bank of America's a $30 stock. I mean, our favorite been Goldman Sachs from the short side, but this one trades double as far as the price concerned what Goldman Sachs is. So for trading options, guys, this is our top pick right here. So as we mentioned, BLK already danced with similar issue a year ago. has dropped from 520. We determined a drop of about $100. It actually tanked all the way to 420. Now, since then, it's rebounded a couple of times to a level of 450, 460. So far, pre-market today, it's at 431. We think there is a $30, $40 potential drop in the making here, guys, in the next 7 days, with the possibility of that actually hitting the level of 360 within the next 30 days. So basically what we're saying, the $15 drop that we've witnessed so far over the course of the last 24, 48 hours in BLK is nothing compared to what's about to come next. So BLK chart, highly bearish. We actually have a mirror pattern right here. If you kind of try to pause this video for just a second, just try to study this chart. You've got this formation of lower highs with the divergence on the RSI, and this repeats itself again right here. Divergence on the RSI, it's similar, pretty much identical pattern right here, guys. Now the difference is this one was over the blue line, and we're very close to being under the blue line. Now you notice once the stock after this formation last time dipped under the blue line, look what happened. Pretty sharp drops. Okay, so we think that's about to resume again once we are under a level of 425. We could see similar formation just like the one right over here, and coincidentally, look what happened, guys. It was October last year. Damn it, can this be for real? Wow. So basically what we're saying, this level of 360, and notice it doesn't, like, even though this drop was quite sharp and did take place in October, like further drops below 360 last year, they did take some time to materialize over the course of about 60 days. So you can buy some shorter term options expiration in BlackRock. You can buy 30-day expiration in BlackRock. So basically split your position, because we're not sure if this move is just going to unveil quickly, sharply, just like it did last time, or it's going to spread itself over, basically a course of 30 or 60 days. So it could, however, start shaping up rather quickly, so it would make sense to have this position on rather than not have any at all. So with that said, we zoom in on the daily chart. It's quite obvious here that this death cross is about to materialize. Now this is a very cool circumstances because it's doing it at the same time as the cross on the MACD is forming as well, and people are starting to panic and they're starting to come in and take their money out. Overall, if you take a bigger look at this, you got double top right here. You can also think of this as a couple of serious big time move 11s, and this one being the third smaller move before the bigger drop. You can also look at this from the standpoint of a head and shoulder formation. So basically everything here, guys, is bearish. Let's review the market moves yesterday on October 1st. On Tuesday was a move 2, and this was nice and easy. One of the easiest moves 2 is basically we pop, we start dropping, we pop, drop, bounce, fall back, bounce, fall back, bounce, fall back. So basically the idea is, when we're talking about shorting and bounces, anytime the market bounces, you want to buy puts, goes lower, you want to collect some gains, buy puts, collect gains, buy puts, collect gains, buy puts, collect gains. Just make sure you don't do the opposite. Don't buy calls, okay? And when you realize shit is dropping again, don't begin to buy puts. You want to buy puts when stuff goes higher. It's just a simple formula, guys. Okay, 2-day sequence is 6-2. Now this 6-2, 2-6, 6-2, 2-6, 11, 6-2, guys, it's been showing up and showing up, signifying the top, and since it continues to appear, this pattern of 6-2, 6-2, 6, 11, 2, 6-2 type situation, basically tells us that there is a much bigger drop in the making, because we're pretty much done playing with the stop formation, and bigger drops are about to materialize. So 6-2 shows up one more time. 5-day sequence 8, 12, 2, 6, 2. There's a high probability of actually a move 11 today, or a 3, with the highest probability of a move of 3. As finally we're witnessing all these moves 11s that we've witnessed on the 5-day chart. They're finally resolving into a move lower, which is about to continue. The highest probability for today we're assigned to a move 3, and that also gives us a high probability of many bearish moves in a row, which pays to actually hold your position, especially, guys, for those of you with small accounts. This is the condition where you can just put on the trade and just wait a few days without just getting in, getting out, getting in, getting out. This is a perfect circumstance of how you can actually propel your account to substantially higher level without doing a ton of day trades. Okay, buying puts on bounces basically is the strategy. We do want to continue to buy puts out of the money in the expectation of a solid 3-day move lower, which could last actually up to 10 days. Now, there's going to be some bounces, so just use the bounces as an opportunity to short the stocks. Now, numerically, VIX is high. It is uptrending. Yesterday, we pointed out that from this level, it was holding this level of 16 really, really strongly. It was destined to bounce higher. This is exactly what we've gotten. We just didn't particularly necessarily thought it was going to break so far pre-market all the way to 19.87. So basically, we went from 15.7 to 19.7. Guys, that's a huge gain in the VIX. Now, expect a pullback to about 19 at the open, and then expect the VIX to resume its upward trend to about a level of 2022 level at some point by the end of the day or tomorrow. And this is an interesting level of the VIX. As you can see on the daily chart, we've got this bearish reversal candle, two of them basically back-to-back around these levels. So it is important that VIX does break above 19, not only break above it, but maintain that level by the end of the day. So as long as VIX is over 19 by the end of the day, guys, we want to stay with puts, nothing but the puts. So let's go and make this happen today. Should be a pretty easy day. Just short the bounces. Remember to short the bounce. And don't be afraid, because the market could actually bounce all the way to 29.38. That is your ultimate entry point. So expect a bounce at open followed by a reversal. Target start buying puts around this area of 29.35, 29.38 area. Watch for 29.22 revisit by 2 p.m. Position for a bigger drop over the course of the next 10 days. With that said, guys, take action. Make it happen today, and I'll catch you on the next trade tomorrow.